Welcome to everyone. Join us today here for a webinar on how to use Elliott Waves for improved trading. This is about leveraging Elliott Waves pretty much, but it is kind of introductory. We're not going to go into much details, although the goal is to explore really what is going on with Elliott Waves. What are they? How can they be, what are the methods to utilize so we can use them to improve the trading? But at the same time, it's a very informative and educational webinar, and those who will be paying attention and can rewatch the recording, because we cannot go through everything that I'm going to show on the slides, are definitely going to benefit in the future, of course, if they follow the rules, the guidelines, and the tips I'm going to provide here today. So on the agenda, we're going to start with a simple introduction. Then we're going to talk about what exactly is the wave principle, why and how Fibonacci and Elliott waves work together, rules and guidelines regarding Elliott waves, which have to be followed. That's why they're called rules. The guidelines are tendencies, but you will understand why we'll have to follow them too. How to spot Elliott wave patterns, how to trade using Elliott waves, and then of course I'm going to leave you with some tips, and we're going to go to a Q&A. So what are Elliott waves? They were developed by Ralph Nelson Elliott. He was an American accountant back in the 1930s, guys. We're talking about nearly 100-year research, right? Or it's actually existing as a method for 100 years. The research it was done back then, is pretty much the same as it's today. It is a form of technical analysis, okay, that looks at the collective behavior of the markets to identify trends. According to Elliott, the gentleman on the picture, the market moves in waves which tend to repeat themselves over time during predictable cycles. The theory uses these patterns and the length of the cycles to anticipate the direction of the future market movement. This might sound a bit hard to digest in theory and reading it, but we're going to see everything today. Now, the wave principle says that each wave has a distinct 5-wave pattern, 3 waves up and 2 waves down. Elliott himself isolated 5 such patterns, which form the basis of the wave principle, okay? By studying these 5 patterns and their variations thereof, because there are many variations, especially in zigzags, traders can get a basis for disciplined thinking and a perspective on the market's position and outlook. Elliott waves offer exceptional accuracy as well in identifying and anticipating changes in direction when used correctly. That has to be pointed out, when used correctly. The wave principle is used in all markets, okay? You want crypto, CFDs like commodities, coffee, stocks, anything. But in stocks, it thrives because stocks provide an immediate measure of the valuation of the total productive capability. And you're going to understand how is this connected with the wave principle. First, though, let's understand what is the 8-wave cycle. So the wave principle states that 3 of the 5 waves, labeled 1, 3, and 5, are directional, and they are called actionary, and this is also called the actionary function, while waves 2 and 4 on the same move to the upside are just interruptions, and this is called the reactionary function, okay? Now, these modes are fundamentally different, both in their roles and in the construction. The 5-wave numerical structure is called motive wave, okay? And the 3-wave structure, it's of course depicted as an alphanumerical phase. It's corrective, okay? And they are employed by all counter trend interruptions, wave 2 and wave 4, going all the way up. Now, as a rule, but not a rule of thumb, as an actual rule, when wave 2 never moves before the start of wave 1. Wave 3 is never the shortest wave. Wave 4 never enters the price territory of wave 1. There is market progress. Okay, and all other patterns are subsumed by that progress. The 5-wave and 3-wave phases form a complete 8-wave cycle. As you can see, we have a sub-waves 1, 2, 3, 4, and 5 going up into 1, and then you have an ABC going into 2, which is again another sub-wave structure. Okay, and this, of course, forms one cycle, which is 8 waves. Now, I want to point out that there is 2 modes and 2 functions, motive and corrective. Motive waves are 5-wave patterns which move in the direction of the main trend, and corrective waves are 3-wave patterns which move against the main trend. Actionary waves, or the functions, if you may, are the waves 1, 3, and 5, and they are directional impulses. So they are motive waves, right? They're actionary because they go with the trend. And the reactionary waves are the waves 2 and 4, still belong to the motive structure, right? In one case, of course. I just want to point out because some people seem to get confused between what is motive, what is actionary, what is reactionary. Now, let me speak to you about a little bit the fractal relationship here of not just the 8-wave cycle, but many cycles combined together. In a wave cycle, as we said before, there is a 5-wave pattern that it's corrected by a 3-wave pattern, right? So 5 and 3, 8 of the same degree. And this completes a larger full cycle. But we also saw a larger number 1 and a larger number 2 there in that particular picture over here, as you can see, 1 and 2. Each same direction component of a motive wave and each full cycle component of a cycle is a smaller version of itself. And this is exactly what a fractal is when at least we speak about the markets. Okay, and that can be used to illustrate 2 waves, 8 waves, or 32 waves, as you can see down here. Then it goes up to 1/4, depending on the degree being referred to. Elliott himself gave them all labels and called them degrees to separate one from another, so that we as traders, Elliottians, we are able to easier not identify, label, I would say, the cycles and use the fractal relationships a little bit easier. The numbers on waves in each degree follow the Fibonacci series, and this is where things are getting a bit more juicy and interesting, which is a sequence of numbers where each number is the sum of the 2 preceding numbers. For example, it starts from 0 and 1, and the subsequent numbers in the series are 1 and 2 and 3 and 5 and 8 and 13 and 21, and it goes and it goes and it goes. Okay, so these are also the number of waves that we have in different cycles. Okay, this is the wave degrees labeling that we know today for each of the time periods. They have their own symbols, so they are easily identifiable. The reality is that, including myself, of course, today Elliotticians use color coding as well because they are easier to see on the chart. Just to give you an example, it's not going to be that usual that you're going to use cycle, supercycle, or grand supercycle degrees, mainly primary, intermediate, and minor, and on a daily basis, playing with minute and minuet. Okay, so as you can see, daily, hourly, 4-hourly, hourly, and less. This is the actual time frame of the chart that you're looking, okay, and which degree is associated with each of these time periods based on how many waves are within them, okay. Now, for example, this is the 1-week chart labeling. Okay, you would be using, like, if this was like wave 1 is 1 week, let's say, 2nd week, 3rd week, 4th week, 5th week. It's not exactly how it works, but just to give you an idea, then you would have primary wave 1 and a primary wave 2. So a total maybe of 8 weeks. Let's just say if we have 8 waves in one cycle, right? Just to give you an example. Now, the 5 basic wave patterns that wave principle said, or I mean, the wave principle didn't say, but Elliott wrote the wave principle, and he said, are diagonals, yeah, are impulses, are zigzags, flats, and triangles. Now, diagonals, there is two variations. There is contracting and expanding, okay? And you also have leading diagonals and ending diagonals. They all have different structures. The five-wave impulse is the same pretty much thing, but in one case, you have like an extension in 1, in 2, in 3, or in 5. And you also have this particular rarely seen phenomenon of a truncation, where the fifth wave doesn't reach the previous wave 3. When we take the corrective phases, most of them are ABCs, and you also have the W, X, and Ys, which are double zigzags and double threes. Okay, and of course there is the triangle, which is the ABCDE, because it's denoted with an extra 2 letters since it is a 5-wave structure. Okay, and of course then you have the triple zigzag and the triple three. That's why you have 2 extra letters over here. So zigzags, simple and complex, and then you have the flats. The flats are 3-3-5 structure. They are denoted again as an ABC because they are corrective. Okay, you have regular flats and irregular flats, 2 different types. But the irregular also has a running and an expanded variation, which we're going to see, and we see the differences between them. Triangles, 5 waves. There is symmetrical triangles, barrier triangles, which is the ascending and then descending, and you also have the expanding variation of the triangle. Okay, so a lot, and this is just the basics. So how can you really tell, you might ask, between motive waves from corrective waves? Okay, so how can you separate like diagonals and impulses from zigzags, flats, and triangles? Well, there is an easy process. Okay, it requires 4 things. This is not a particular order, but I mean, it will probably make sense to you if you start using it, which one should come first. But in my opinion, this is the rightest method or sort of step to do it. Do you see a 5-wave or a 3-wave structure when you look at the charts, or is it something more complex? Okay, that's the first thing you need to ask yourself. Okay, is there an overlap between waves 1 and 4, or between any of the waves? We mainly care about seeing 5 waves going up or down without overlaps. Okay, so if there is an overlap, then probably that's not an impulse, at least, but maybe it's still a motive wave. Do you see any fractal relationships? Okay, so are the 5s, if we identify a 5, going with the trend or against the trend? Because if it is against, then we're probably looking at correction, because corrections can have 5 waves too. Okay, and then of course, when we look at the whole chart, do we see more 5s or more 3s towards the trend direction? Because if we see more 5s towards the trend direction, it means that we're probably looking at, well, either a correction depending on what we are spotting, or a breakout which is going likely to continue in 5 waves. So jumping on to the Fibonacci's and Elliott waves, I'm not going to go into Fibonacci's a lot, just to get you the basics. It was discovered in 1202 by Fibonacci. He was trying to solve a mathematical problem involving rapids multiplying over time. It is a mathematical sequence in which each number is the sum of the previous 2 numbers beginning with 0, 1, as we said before, and you go to 144 and blah, 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 blah. The further down the sequence, the revision of adjacent and next numbers approximate to 0.618, which is the golden ratio, which I'm sure you are familiar with, the Fibonacci retracement 61.8. Okay. So then you might ask why Fibonacci matters with Elliott waves, where Fibonacci matters in general in the markets for 3 main reasons: math, psychology, and progression. Fibonacci sequence is a mathematical pattern of growth found throughout nature. You see it on our own height, including the elbow, the height of the head. These ratios exist everywhere. The 23.6, 38, 56 to 1.8 is not just in traditional markets, guys. It's everywhere. That connects to psychology. The wave principle suggests that the same law governing natural phenomena also applies to the actions of mass behavior. You do know what mass behavior is and mass psychology in the market, right? And that is represented by the stock market. And when we're talking about progression, the 1.61 ratio, okay, found in the Fibonacci sequence is seen as the fundamental key to progression and growth patterns. Okay, so if a leaf gets bigger, it gets bigger based on the Fibonacci ratio. Okay, just to give you an example. Now, bringing the two together, the sequence is an additive sequence of numbers used to identify potential areas of support and resistance in stocks and currency markets and any other market. The sequence is derived from the golden ratio, which we just said what it is, and its application can help traders make predictions about future price movements. The wave principle suggests that market activity is governed by the same law governing living creatures and galaxies, and that this law manifests in a 3 steps forward, 2 steps back fashion, and this is what is important. The Fibonacci ratio is a fundamental law of geometric progression that underlies many natural phenomena and, of course, in the stock markets. How do we use Fibonacci in conjunction with Elliott waves? Well, first of all, the number of waves, 8, 13, 21, 55, 144, these are Fibonacci numbers, guys. So as we progress, because most of the time, most of the traders miss one of the very important points. Everybody's just using price to do their analysis. Support, resistance. No one is using time, which means we're missing 50% of the price action because prices are moving. And as they move, they don't just leave patterns on the way up, but on the way to the right as well. Okay, so number of waves, number of bars. So if you have 8 hours consecutively on the 1 hour time frames, for example, then, and this is a correction low, the next correction low might be 8 hours later. Okay, that's the point here. Now, we need the length of a progression, which is exactly what I just told you about, because it's not just about the number of bars. The length means the ratio. 8 is the number, serious number, but 8 times 1.618, it's not. It's an actual ratio. Okay, so we can use both Fibonacci time and extension tools. Okay, and then of course we look at the depth of the regression. When I say regression, I'm talking about because progress and regress when we are correcting, for example. Let's say wave 1 and 2, wave 2 is 61.8 of wave 1. Perfect. So that is the depth of the regression, 61.8. This is an actual ratio. But at the same time, that ratio could be timed. We could know when the low is going to stop. It's going to be in based on the length of the progression or the numbers of bars or the numbers of waves. And this is how is the best combination between Fibonacci and Elliott waves, when of course you know the patterns as well. And we're going to go there soon. Now I want to show you something here that relates to Fibonacci's and the simple 8-wave cycle we saw before. Wave 1, it's 100% of its own length, right? As you can see, wave 3, it's typically 1 times 618 the wave 1. Okay, so if wave 1 is 100 pips, wave 3 is going to be 161.8 pips. And then wave 5 is going to be again 100 pips added on wave 4. But wave 5, apart from being just wave 1, it can also be 0.618, the ratio of the net distance through waves 0 all the way to 4. Okay, the wave 2 is 61.8 of wave 1, and wave 4 is 38.2 of wave 3, typically. Okay, and this is just so you understand what's going on. And if we just assume all of this is 1 and 2, then again you go back to 61.8 and off we go up supposedly for the 1.618 of wave 1. Now, rules and guidelines, RNG, short. The birth of them first, quickly. Well, the wave principle suggests that markets progress in a similar fashion, okay, to the Fibonacci, of course, and not just the sequence, but the spiral pattern of progression as well. Fibonacci retracements and extensions, you might ask, why do they work? Work because they are based on mass psychology. And mass psychology refers to the idea that financial markets move in predictable patterns based on people's behavior. When these people's behavior is imprinted in the markets for over 100 years, let's say, or even before Elliott, because Elliott did base his analysis based on markets historical data before he did the analysis, obviously. So Elliott just simply found the relationship between Fibonacci's and mass psychology and identified and established unbreakable structures. And I say unbreakables because we have the rules that govern them, and those that the masses tend to do, and those are the guidelines. So he found structures that happen all the time, 100%, and he put rules on them, and he found things that happen within these structures, and there were the tendencies that happen most often rather than not. Those are the guidelines. Now, the funny thing, or the surprising thing, or the interesting thing is that the wave principle itself, it's all about the Fibonacci series. We have one basic form, two different modes, yeah? Motive and corrective. We have three groups, motive, simple corrective, and the combinations of the corrections. We have 5 orders. There is 3 orders of simple patterns, motive, 3 triangles, 2 orders of combinations, double corrective, triple corrective. Okay, no, 3 orders and 3 orders of, no, 3 and 2, my bad. You have 13 families, again a Fibonacci number, 5 families of simple patterns, equals, diagonal, zigzag, flat, and triangle, and you have 8 families of combinations, which are zigzags and flat, zigzags and triangle, flat and flat, flat and triangle, zigzag and flat, flat, zigzag, flat and triangle, flat, 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 and flat, flat, triangle. All of these combinations are possible, guys. That's why I'm telling you, it's impossible to have look through all of these in one session, but trust me, I have so much to show you for the rest of the 40 minutes left that you're going to have a lot of homework to do. And you can rewatch this video recording, of course, to get all the rules and guidelines out for yourself as well, because you're not going to find anywhere else so many information into one webinar. And the variations, because you've got 13 simple patterns again. Okay, so again, the Fibonacci sequence is here. The numbers are imprinted in how many patterns we have, for example, how many families of combinations. Now, before we go to more practical stuff, some of the basic Elliott wave rules that you should know, you should remember even now, never forget. In wave 2 can never move beyond the beginning of wave 1, never. Otherwise, it's not a wave 1. That is the same for wave A, of course. Wave 3 cannot be the shortest of the actionary waves. You see 1, 2, 3, 4, and 5. Never the third can be the shortest, never. 1 can be bigger than 3, but not 5. Or 5 can be bigger than 3, but not 1. So 3 has to always be not the shortest of all. Wave 4 cannot move beyond the territory of wave 1 when we have an impulse motive wave. Okay, never can we have an impulse with 4 going below wave 1. So now you might ask, why do we have to follow rules and guidelines? Well, there is 4 main reasons. You can accurately identify patterns, okay? You can improve predictability. You can recognize false signals, and you can secure profits just because you follow Elliott wave rules and guidelines. That, of course, assumes that you know how to identify Elliott waves as well. But we're talking about the rules and the guidelines now. We haven't gone to the patterns yet. Now, staying consistent ensures that you have the right main count and most likely also the right alternate count. And we're going to look at the counts soon. Improve predictability because knowing where one could count gets invalidated allows better price move anticipation. Okay. Most of the people think that Elliott waves are too subjective because there's just too many counts and too many possibilities. And this is their mistake. No, they are thinking it's subjective because they don't know Elliott waves. But when you know Elliott waves, you think the subjectivity is actually its power, because anything that happens, you know, you have an actual scenario of how markets are going to move based on that, because you know the invalidations. Now, knowing where trends might change later rather than now gives traders an edge. Okay, this is how you recognize forces. And expecting levels to be reached or structures to complete allows locking in profits on time, because sometimes people let profits run for, I mean, like hoping to make millions out of a few $100s, but it doesn't work like this. By knowing these points of ruins with Elliott waves, then we can secure them at the right time. The question is how to abide to rules and guidelines. Well, this is my process, yes, of course. Identify, there's 3 things I follow. Identify the 5 wave structures and the 3 wave structures on all time frames. This is the first thing. Okay, by doing this, we separate impulses and corrections. We know where the main trend is, and it's very, very, very important. You don't just use the moving average 50 and above there, it's bullish. This is not how it works, guys. There is a market structure that we need to take from. We don't take from a moving average. Use rules 100% accurately if you want to abide to RNG without the slightest of exceptions and bending, because I've seen so many people trying to bend rules and I do exemptions like, oh, I haven't seen it, so maybe I shouldn't. Oh, no, this is not how it works, guys. We're talking about actual rules. You do not make a count that breaks the rules. It's as simple as that. And always count according to what the guidelines say, even if your gut says otherwise. Okay, if we don't follow the guidelines, we're going to be ruined. We're going to have 100 different variations in mind, and we won't even have like a full day to, let's say, take 5 different pairs and make analysis. Okay, we have to follow the guidelines, because with the guidelines in mind, what we do is we play with probabilities. So you keep the high probability counts and you leave everything else out, because if you do all the counts, you're going to have 10 counts for each pair, which you don't want, and it's not helping. You need to have main and an alternate count and short-term variations of both, and that's it. Now, the most important guideline, the guideline of alternation. The guideline of alternation states that one of the corrective waves will take the form of a simple 3-wave pattern, for example, over here, a zigzag or a flat. A flat is a simple 3-wave pattern, while the other will take the form of a complex pattern, such as a triangle or a combination. So you see that we have a sharp move to the downside because it's either like a flat or it had a deep move to the downside, or you're gonna go sideways, right? They are very, very evident. So if wave 2 is sharp, wave 4 is sharp sideways. That's what the guideline of alternation says. It's not a rule, it's a guideline, which means if wave 2 is sideways, you have to expect wave 4 to be exactly an ABC or maybe a flat and quick. Okay, typically that's what I'm saying. Sharp zigzag appears in wave 2, wave 4 would be a shallow complex correction. Also, the depth and the shallowness matter. Okay, so maybe when I get an ABC and it's going to be very deep, so the sideways is going to be shallow, or maybe when I get like a sideways correction here, and it's not going to be deep, it's going to be shallow. So wave 4 is going to be deep. Okay, good. Now let's go to the patterns. Obviously, the 5 main ones, right? Motive waves, impulses first. There's some characteristics, and I have some basic rules here first. These are the ones that you need to learn first, let's say, the most important ones, because there is many rules in guidelines. Impulses are 3 different types, okay? The 3rd wave extension, the 5th wave extension, and you also have the 1st wave extension. Typically, only one of the waves extends. Sometimes, in commodities especially, 2 waves will extend, and in cryptos. So the label 1, 2, 3, 4, 5, the structure is 5, 3, 5, 3, 5. 1 wave is always an impulse or a diagonal. 5 wave is always an impulse or diagonal. Wave 3 is always an impulse. In impulses, never goes beyond the wave 1. Wave 4 never overlaps 1. 3 is never the shortest. We never have triangles in 2 unless if they're combinations, and diagonals exist only in 1 or 5. Rules and guidelines. Make a screenshot, put it down. Diagonals. There is pretty much 4 different variations. You have though 2 types. You have the open or contracting and the expanding or widening, broadening. The correct characterization is contracting to be fair, and expanding. Labeled as motive waves 1, 2, 3, 4, 5. Leading diagonals can be 5, 3, 5, 3, 5, but also 3, 3, 3, 3, 3 structures. But the ending diagonal is only 3, 3, 3, 3, 3 structure. Okay. In wave 1, in diagonals, in contract diagonals, wave 1 is always longer than wave 3, and wave 3 longer than wave 5. That's how we can get the contraction. Okay, it looks like a wedge. And in the expanding variation, it's the other way around. Wave 1 is the shortest, 3 is bigger than 1, 5 is bigger than 3. Okay, rules. Wave 4 always overlap, but it can never go below wave 2. The corrections in ending diagonals can only be zigzags. Okay, only the corrections, okay, can only be zigzags. Wave 3 can never be the shortest, and when we have leading diagonals, they occur always in 1 or A, and in diagonals in 5 or C. Okay, now when I say corrections can only be answered, let me be a bit more clear here. In 3, 3, 3, 3, 3 variation, both leading diagonal or ending diagonal, you can have double zigzags as well. Okay, but only in the corrections. And this is again all the rules and guidelines I have known and I have here for you. Zigzags. I put it in like some sort of combination already so that you understand what it is. A simple zigzag is labeled as an ABC, and the structure is 5, 3, 5. It's your 5, 3, 5, right? So when you have 2 zigzags connected together within one by an intervening wave, which is called the wave X, then this is called a double zigzag. Okay, a double zigzag. You have to have waves W and Y as simple zigzags. Otherwise it's not an actual double zigzag. Otherwise, it's a double 3. Okay, which we're gonna get. W, the wave X, doesn't matter what it is. We do not care. Now, typically, waves A and C in zigzags are equal. That makes W and Y also the same. Okay, but here's one important thing with ABCs. Never B goes beyond wave A. Never. A is always an impulse or diagonal. C is always an impulse or diagonal. It cannot be anything else. That's why it's a simple zigzag. Now, in W, X, and Y, they comprise 3 or 5 corrections. Comprise 3 corrections or 1, of which are the opposite. So it's a bit confusing here, but let me explain to you. We have a W, X, and Y. Okay, W and Y are like actionary corrections, and the third correction is the X, which is reactionary. Okay, that's why I say comprised of 3 corrections. Sometimes though, we have 5 zigzags because you have a WX, YX, and Z, which is the triple zigzag, right? So I just want to make the distinction. And here you've got rules and guidelines as well. Now going off to flats, we said regular and irregular. Regular ones, it's when wave B goes above 90% of wave A, but never over 105 of wave A. Okay, so the rule with all of them is that wave B has to do 90% at least of wave A. They're of course labeled as ABC because they are corrections. The structure though is 335, and this is why they are easier to identify. Okay, A and B are 3s. Okay, and C is either an impulse or a diagonal. B can travel beyond wave A. Now in the regular flat, I said 105 of wave A, okay, and wave C has to retrace at least 61.8 of wave B. It doesn't need to go all the way down or go beyond. It can be truncated, if you may, just to make it a bit easier, but it has to do 61.8 at least. In the running flat variation, it's the same. We cannot go below wave A, and wave B goes beyond 100 and, well, 5%, let's say, of wave A. In the expanded variation, we'll have to go 105 above of wave A, but wave C has to also go below wave A, okay? And these are the rules and the guidelines. And then off we'll go to triangles. You have the barrier triangles, which are the ascending and the descending. You have the contracting or symmetrical triangles, okay? You have the expanding triangles as well. They are labeled as A, B, C, D, E, but sometimes you might see F, G, H, I, because it is also a 9-wave triangle. Typically, it's wave D or wave E that can be a triangle within a triangle. It's a 3-3-3-3-3 structure, and all the waves are threes, all of them. Typically, subdivisions are 61.8 of the preceding wave, but this is in the contracting, in the symmetrical variety, of course, as a symmetrical, okay? Now, rules. 4 out of 5 waves are zigzags. There must be zigzags, but one combination is allowed, or one triangle, only one. Symmetrical triangles have larger succeeding waves, okay? Symmetrical triangles have actually smaller succeeding waves, sorry about that. And the open variation of the symmetrical triangle should have larger succeeding waves, right? So as we go in time, as you can see down here, expanding, the waves are bigger and bigger. And in the barrier triangle case, you know, you have sort of, there is no open barrier case, if you know what I mean. So in the barrier case, you just have one of the lines. The rules is that A and C and E in one case are straight line, and in the other case, you have the top being some, well, it depends on whether you are looking at descending or ascending, but whether markets are going up or down. That's the point being made here. And here are the rules and guidelines for you again. So take a screenshot for this, and you know, this is how you can start learning and practicing. Complex zigzags, just having a quick look here, for example, on a combination of a flat zigzag and zigzag. You remember we said before that WX doesn't matter what it is, but when you have one zigzag and the other one is not zigzag in W or Y, then you have a double three. Over here, you have an ABC, ABC 1, 2, 3, 4, 5, very easily identify a flat, a combination connected with an intervening zigzag and a zigzag in the ending end of this. Label WX and Y could be also WX and YX and Z if it's a, well, triple three. And the structure is 3-3-3 always. W, it's never a triangle, guys, never. Okay, we said it can be, did I say it can be any correction? I don't think I did, but anyway, if I did, erase. Never anything starts with a triangle, never. Now, typically WX and Ys are sideways patterns, okay? But sometimes you also see them like leading to an extended wave Y with 161 extension, and you might think it's an impulse, but it turns out that, you know, if you see at the structure internally, you're looking at no impulse. So, you know, that's what should tell you that this is an actual double three or double zigzag. So a double three combination comprises a zigzag and a flat and a zigzag, a flat and a flat, a zigzag and a triangle, or a flat and a triangle. Yes, all these combinations are possible. And there you go, rules and guidelines once again. And what is the alternate count? Because we mentioned the alternate count before. The alternate count is a way to assess the potential of a different combination of Elliott wave patterns. Okay, for example, look at this. You have a wave 1, wave 2, wave 3, wave 4, and wave 5 going up. This kind of looks like a diagonal, okay, and anyone would have this as a main count, but the alternate would be for this to be 1, 2, and then 1, 2, i.e. you start a new wave 3. And that would be, of course, a much more extended move to the upside versus a diagonal that just finished. That is going to get you to a correction first and then further continuation. But the right alternate is this one, because if wave 5 goes beyond wave 3, that means that there is no diagonal here, because wave 3 cannot be the shortest, right? So it will automatically become a 1-2, 1-2. So what kind of waves in one scenario is less likely than the main count, or you need a view of how the opposite direction structure would look like to prepare for a scenario as well? This is when you use the alternate count. We not just use it the immediate one, because for me, I don't use this as an alternate because I know automatically what is the alternate. For my alternatives, I'm using scenarios that they are looking at the wider sort of picture. For example, can this be a fifth wave ending, or like, are we expecting another 3-wave leg to the downside and then further continuation to complete, another 3 and a 4 and a 5-wave higher up? So alternate counts must be checked regularly against the main, okay, to identify any potential corrections or even new alternates. And sometimes when you actually do try to find alternates is where the aha moment comes, and you are up against with new opportunities, or realizing that, oh, you might have to cut losses because that might play out. Okay, so it definitely helps understanding the overall structure and not just spot potential opportunities, but also save from others. So how to decide between main and alternate, you might ask? Well, as I said before, rules are very, 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 very important, guys. Like, this is #1 priority, okay? Rules comes first. Now, the looks come second. There is the guideline of the right look, which we didn't really speak about, but I mention it here because, there is nothing really to be careful of. We just have to be careful of the characteristics and the structures. It has to have the look that you see printed on the patterns that I'm revealing over here. If it doesn't have, if it looks like it's off, even for a bit, then it doesn't have the right look. And that means that, okay, well, that's not that then. We should look for an alternative, okay? And that tendencies come last. So yes, this is the right process. Rules, right look or structure, and guidelines. This is how it works, okay? And then this is how because sometimes it's very tricky to decide which one is the main and which one is the alternate. Or if you weigh how many rules are being supported here, respected how many rules here, it might be exactly the same amount of rules. And then you come to the right look, it's exactly the same right look, and then you have to come down to the guidelines. And if you see that 5 guidelines work versus 3 on the other case, then the one that has 5 guidelines working, it's the one that has to be your main. It's not a preference. That's what I'm telling you. It's an actual process. So how to spot them? #1, determine the stage of the progress towards motive wave direction. We need to know that. Identify the counter trend structure. This is how we get setups. Work out risk to reward. Where is the invalidation? And so the setup remains bullish or bearish throughout the trade, because we don't just get in and forget about it. It's not how that works. Look at an example of FTSE, and I have a surprise here for you. Where is the trend? Up. But we also see a trend down. And we have actually seen no overlap. So we call them 1, 2, and we'll call them 3 and 4. And this is the area where we're looking for a correction, right? But when we use the Fibonacci, we realize that we've actually come above guideline levels. Look, we corrected quite a lot here, up to the 50%. It's not so typical. So what comes to mind straight away? Oh my God, this guideline is not respected. We gotta say it to ourselves. It might end up doing in the end, maybe it's going to be a triangle and I'm going to have to use the 38 instead, but this is what happened. That is now an ABC, right? So while you're trying to find opportunities in one trade, you might pop up with another opportunity, exactly what I was saying earlier. This is a wave 1 and 2, an ABC correction finished now, 1 and 2. Look, we're moving up. Well, according to guidelines, 87966 is the next level up. This is a Fibonacci extension of waves 1 and 2, right? If wave 2 is in. If it's not 2, if it's not done, well, this is how, that's why we have to pay attention to the markets. If prices move up and get to 17 76, that will increase the chances of getting there, and we are going to be correct. But if prices stop here and we start going lower down, maybe wave 2 is not done, or maybe we're going to get a triangle, or maybe we just had a very deep wave 4, which is not so typical. Advantages and disadvantages using Elliott waves. The pluses and the minuses. Well, you can identify potential reversals. You can predict price movement. You can set up ideal entry and exit points. You can reap larger rewards before even major moves, because we always want to get the setup in wave 2 and ride wave 3. Minuses is difficult to interpret, too subjective, but not what I say. But it is very difficult to interpret. You will have to work hard, but you don't need to become an Elliottician. You just need to understand the 5s and the 3s. You don't even care about whether, you know, the rules or whatever. Even if you just are able to identify the 5s and the 3s and the corrections, you at least know where the market is heading, and you can include that sort of small process in your existing strategy. Too many scenarios, if there is no process, that is, many mistakes with 5s, because some people count 5s, but there is like 8 waves in there, and which means there is an extension somewhere that is going to be extended further, and they are selling, and they're like, oh my God, you know. And it actually, the other ones, it requires years to master, and this is not, I'm telling you from experience. So common reasons: EW improves trading, it confirms the trend, and invalidates scenarios, it warns ahead of time, and it limits your losses. Okay, these 4 things are very important. These are common reasons for everybody, why everybody should know even a little bit of Elliott waves. Off we go to trading with the wave principle. Well, there is 3 main reasons. Okay, why the wave principle? Follow the trend and its terminal point, use high probability objectives, and turn corrections into setups. Okay, this is the main 3 reasons we can make wave principle successful. Okay, and off we go. With that last slide, we're coming to where are the bull market setups and where are the bear market setups. In a bull market, wave 2, 4, okay, is the bull market setup. Okay, in a bear market, wave 2, 4 again is the setup, and then you have 1 and B to the other side, and 1 and B to the downside. It's how it works. Okay, impulse setup 1, 2, 3, 4, and 5 stop at or above the previous wave 5. The entry, and this is just one of the interpretations, right? If you see here, we have 1, 2, 3, 4, and 5. In wave 5, you have 5 waves. The wave 4 in 5, it's the typical entry. Targets: wave 4, wave 1, and then 4, 2, 3, 6 of wave 1. And the wave 1 is the first one that we're gonna see coming on the way down. Okay, some use Fibonacci targets as well, fine with me. Same process for the position to the upside, and in diagonal setup, because this is not in diagonal setup, but they are very similar. Again, the entry is the 4th wave of the internal structure, and the protective stuff is above or at wave 5. The trade targets are the same, but with ending diagonals, you also have the ability to let the trade run. Okay, because it could be a full-blown reversal that's going to get you to 2 years or 3 years of going down the hill or up the mountain, if you know what I mean. So yes, they definitely are offering very good risk-reward ratio. The setup for zigzags, it's at the wave B. Okay, we see the correction in wave 2. Let's say you have A, B, and C. You wait for C to finish, okay, and then once markets start moving up, and assuming, of course, you're seeing a structure that looks impulsive, right? Wave B could be your entry, and from there, wave A 0, that means it's where wave A starts, right? It's one of the first targets. Second one is 1618 of wave A, yes, of wave A, and then 2 times of wave A. That is the second target, okay? Because there is typically many targets, guys. I mean, I know that some of you may be trading with a fixed stop loss and a fixed like 40 pip sort of gain, but well, that's fine. You can continue doing this, but the Elliott waves are different. The setup for the flat is again the internal waveform of wave C, and the protective stuff is just below the wave C. Can be a bit tricky sometimes, to tell you the truth, because sometimes when we especially get expanding variations, yeah, what happens is that it goes up and then turns back down. So you have to ensure that as markets go up, you see clear 5 waves, whether you enter before or after, it doesn't matter, but you have to look for the first leg has to be 5 waves up. Otherwise, there is a risk for it to return back lower. Targets is the wave B, of course, first up here all the way to the top, 161 of wave C, which is this one, okay, all the way up, and then 2 times of that, which is kind of the measure. You can call it like the Fibonacci anti-retracement if you want, or inverse retracement, or call it what you want. But anyway, if you have any questions, you know, guys, the email is going to be at the end, and the team will be more than happy to send me your questions through. That assumes, of course, we're not going to have time, and it looks like we're running out of time anyway. But let's hold there, and we are close. Triangle setup. The triangle setup is wave D, is the last wave before the last, right? And the stop is either at wave E or just below wave C. I prefer the wave C approach a little bit more, to be fair. And then, yeah, the target is the beginning of wave A, which is all the way where we started coming off down from 161 of wave A, and then 2 of wave A as well, which is otherwise called a measured move. And that is with the setups as well, guys. So a lot of information for you. Don't mistakes, because you need to be careful of them. Not following your own rules and guidelines. And I was actually very crucial on that, right? Getting caught up in short-term counts. If it doesn't make sense, and if you spend too much time, don't break your brains. Just let it go. Short-term counts, they are just part of the bigger trend anyway. If you know where the bigger trend comes, you know, don't trade for a day, it's okay. Trying to find the most unlikely variations. Sometimes I've seen a lot of beginners, probably analysts, trying to come up with a most impressive count that nobody else has thought, just because no one else has thought it. But well, we don't have to think about variations that they're not really typical. We just follow the guidelines, and that's what we care about. Not confirming the structure with theory. As I said before, that has to do with the right look. We have to look, print all the patterns, stick them on the wall, and look at them every time you're trying to identify something. This is how you're going to learn. And then another top mistake, using Elliott Waves exclusively as a strategy, especially if you're getting into this right now, guys. This is a very big mistake, a very big mistake, okay? What we did here today in the setups, you can use, but in the beginning, I would encourage you to be very careful and try to start first with identifying the setups, using the Fibonacci extensions and targets, okay? And most importantly, identifying the 5s and the 3s, not just the corrections, okay? The 5s matter as well. Tips, well, as I was just saying, practice pattern recognition in real markets. Keep track of counts to reduce subjectivity. Always follow the rules and improve discipline. It must be done according to guidelines, as I was just saying also before. Now, I've got some references here. Of course, you may not know Elliott Wave International, but it is the, I think they are 1979 or maybe even 72. They're probably a 50-year company, guys. Robert Percher, Kennedy, all the people that have brought Elliott Waves into the today's trading society are in Elliott Wave International. All the references there, you can follow them. It's my recommendation to you. So Q&A, and as I said, if there is any sort of questions that we're not going to manage to reply, because I see quite a few are coming, please feel to send your emails to marketing, and I will get back to you. So someone is asking if there would be another webinar for an application of Elliott Wave in live markets. Yes, well, this was literally more of an introduction to Elliott Waves and how they can be used to help you utilize them in your strategy, or to get you a head start, because that information is not found anywhere, especially online, and it's very important to remember that this webinar was very juicy, a lot of information. Whether there's going to be another more practical Elliott Wave webinar, I don't know for sure, but I'm very happy to discuss this with the team, and of course come up with another webinar that is going to be a bit more practical. There is another question here related to the average success rate of Elliott Wave analysis on trade setups when it is applied correctly. Well, this is a question that doesn't have a specific answer. Elliott Waves, it's not like a strategy that we can take and say, we apply the rules and guidelines, we'll make an actual EA and we'll put it in the market and it trades. It works a little bit different. First of all, it's very hard to actually produce an actual EA that can tell you statistically how many times one thing's work versus the other, or what is the success rate, because every Elliott Wave Elliott edition is actually got different results, okay, when it comes to trading. But just to give you a little bit more of an idea, okay, the success rate of Elliott Waves, it's very accurate when it comes to what is going to happen to the market based on previous tendencies in particular phases of a trend. For example, as I was saying before, if you're able to identify corrections correctly and able to spot a reversal correctly because you saw an ending diagonal, then the obvious thing is that you're going to be much better at identifying a wave 2. When you identify a wave 2 and you can use that setup to trade wave 3, this is all you need as a trader. Your success rate is going to be very high, and the risk to reward ratio that you're going to produce is going to be very high as well, because you're going to be using Elliott Waves correctly. And to give you a sort of a different perspective as well, if you use the guidelines are typically tell you that between 80 and like 95% of the time, or sometimes even 100%, who knows? Well, if it was 100%, it would be a rule. Let's say 80, 75 and 95% of the time, guidelines tell you that that thing was accurate. So if the guideline says, let's just go quickly on a guideline, just to pick one. So just to give, look, we'll say here, usually wave C subdivides into a zigzag combination that is no longer lasting. Okay, this is the WX and Y. Let's not do that. Let's look at which one. I'm just going to look at, okay, you see in the contracting variety of an ending diagonal, wave 5 usually ends beyond the end of wave 3. Failure to do so is called a truncation. Okay, so what this tells you pretty much is that most of the time, okay, guidelines, wave 5 usually ends beyond the end of wave 3. That means that the top, it's wave 5, is not wave 3, right? But sometimes it can be truncated. That actually tells you what? That when you are looking at a truncation, you might have even lost an opportunity, okay? Because maybe you're expecting prices to go above, the wave 5 to go above wave 3, okay? And that should be the expectation, but like maybe usually ends, right? So maybe like 85 to 95% of the time that happens. So the other like 10, 15%, that there is a failure. So you have a 15% losing chance of not being able to identify an ending diagonal correctly, okay? And then that ends up being a lost opportunity for you. This is how Elliott waves work. It's, unfortunately, we don't have an actual statistic, because as I said before, each technology, even that they are doing Elliott analysis as well, it works differently. And every Elliottian has also different count. So I hope that kind of replies your question. So the time has actually come to an end. It has been very great to be giving you this webinar today, guys, because it's actually where I specialize as well. It's what I passionately do, Elliott Waves. And I will be glad to do another webinar, more practical, of course, for your understanding. I couldn't just go simply on practicals because obviously we need to introduce the actual theory first, and what exactly are we talking about to people first. But it's been I've enjoyed a lot, and I hope you did as well. I'm not going to take any more questions, but if you do have them, send them to marketing@infomarkets.com, and hopefully I will see you again next time. Thank you for being with us today, and take care.